In today's Forex midweek analysis, we're talking about the DXY, the euro, the pound, and the dollar yen. And I think we could be on the verge of some significant reversals in the Forex market after what has been a pretty slow couple of months. And furthermore, we also have FOMC coming up here in a couple of hours. So that could be the catalyst for some significant reversals. So let's get straight to it. And first, before I do that though, guys, this video is sponsored by Blueberry Markets. I've known these guys for 8 years. If you're looking for a trusted broker where you can trade Forex, crypto, commodities, and indices, and with my link, get a 30% deposit bonus, be sure to check out the link in the description of this video and sign up with them today. All right, so looking at the DXY, we have talked about this trend line here off of the February high several times. You can see where we have several touches here over the past few months. And once again, the market is testing that level here today. That's why we're seeing the DXY pull back. Now, one significant development, though, that happened here with the DXY recently is we had the close above this level here at 98.30. So in the last weekly Forex forecast, what I talked about was the significance of this level here. So this was step one for the DXY to potentially bottom here. And the reason why the market could bottom here is because, first of all, we know that 97.7 is a significant horizontal level going back to 2022. However, this area down here is also the location of a channel support that goes back over a decade that we also talked about. So we'll take a look at that in a second. But this right here, guys, was step one. Okay, this was step one of a potential bottom reclaiming levels like 98.30. Now, in order for the DXY to really break out, though, of course, we still have this descending trend line off of that February high, which again, you can see we have several touches here ever since the start of 2025. Now, let's take a look at the 2-week time frame and talk about the bottom of this channel. And if you guys are enjoying this content, if you find it helpful, be sure to smash the like button and also subscribe to the channel. These videos and content take hours to make and a few seconds to like, so be sure to do so right now. All right, so looking at the 2-week time frame here for the DXY, you can see where we talked about this over the weekend, but you've got this channel here off of the low from down here in 2011. You've got these lows through here and now 97.7. So this was a significant area for the US dollar going into this week because we knew that this was going to be a confluence of support down here at 97.7. And sure enough, we are getting a little bit of upward movement here from the US dollar reclaiming 98.30. But again, we still have this level over here at 99 to deal with, this trend line. And furthermore, like I said at the beginning of this video, we also have FOMC coming up today. So that's going to be a significant driver for these markets. Okay, so in my opinion, today's FOMC, guys, could make or break this. In other words, does the DXY close right back below here? Or do we finally get a break above 99 to target levels like 100.2 and 101.9? Now, I've talked about this for weeks, but I would personally love to see the market bottom down here simply because we know that this is a confluence of support. It's a massive support area here for the DXY. And furthermore, when you look back here at this price action, okay, you had a significant sell-off back here from the DXY. Notice how we got a very shallow retrace. So you have these 3 candles back here, these 3 red candles, okay, 1, 2, and 3 back here. And so far, there has been no retrace into this pocket. So a lot of times, guys, when you see this, this is an imbalance in the market and it can serve as a magnet for a market. However, like I've said in recent videos too, though, this right here, even though this could serve as a magnet for the DXY, what you need in order to confirm that as a target is going to be a technical trigger. And the technical trigger right here is, again, 1, closing above 98.30, okay, which we got. Number 2 is going to be to close above 99, break out from this trend line and target some of these higher levels. And this area up here around 106 becomes my final target, okay? But again, I have to stress the point that this right now is a potential setup, okay? It's a potential setup because we don't have a confirmed breakout just yet. And plus, like I said, FOMC is coming up. All right, so let's take a look at the EURUSD here, which is also flashing signs of a potential reversal because if you look here at the 3-day, right, let's go back here to this price action from back here in 2021. And you can see where this right here, okay, this is the 1530 level, the 1.1530 level right here at these lows. So we know that this is a significant level going back here to 2021. This is why it's on my chart. And if we go over here to the daily time frame, what you'll notice is that recently, okay, just yesterday, we had the market holding above it back here, okay, holding above this. This is what we talked about in the weekly forecast. You have the high back here, resistance. We have the market breaking out above, okay, up here. And now we have the close back below on Tuesday. So Wednesday, look where the high is, right there, 115.30. Okay, so we will see if this holds up, guys. Now, full disclosure, I do have a short position on that I literally just put on not too long ago. And again, I'm well aware, guys, that we have FOMC coming up. However, the key here is that my invalidation for this is right here. My invalidation is 115.30. So my hard stop is above these highs. My mental stop or soft stop is going to be any close back above here, okay? So the point here is that my entry is very close to my invalidation level, which is 115.30. And also the risk reward here, guys, is excellent because if you look at this here, and this is not financial advice, obviously, but if you're shorting up here, your stop loss is up here, mental stop on any daily close back above here, right? You've got a very, very tight stop loss there with that mental stop at 115.30. And then you've got targets down here, like key areas down here at 110.60. But specifically what I want to talk about here, and I've mentioned this in previous videos, but you've got this pocket right back here around 1.06. Now, this lines up with the DXY up there around 106. And you can see here that we got a very aggressive breakout from the euro back here and a very shallow retrace. So candles like this back here become imbalances if we do get that confirmed breakdown. Now, to be clear, guys, we have step one of a possible top for the euro, okay? And again, I want to be very clear about this. This is step one, okay? This is not, in my opinion, a fully confirmed breakdown, because what we need to see for that to happen is areas like this failing, okay? This trend line down here off of these lows. So you can see that back here off the low from late February, you've got the low down here. All right, so let's draw this out. We've got this low, we've got these lows through here, and you need to see the euro get below here. Okay, so specifically 114.40 or so. If we see the market getting below here, then this becomes a failed breakout, and we're looking at that turn lower, in my opinion. Okay, so that's what I'm looking at here for the euro. Now, obviously, any close back above 115.30 on the daily time frame keeps the rally intact and exposes 116.60. Okay, so if that happens, if we get that following today's FOMC, if the market were to close back above here, right, anywhere up here in this area, then I'm out of the short position. And again, guys, you got to look at this from a risk reward perspective. Yes, I know FOMC is coming up, so you could say it's risky to enter now, but my risk is based on this entry and this stop. Okay, that's how I'm calculating my risk. And so any close above here, I'm getting out with a partial loss. So I'm perfectly fine with that, considering the potential here is areas like this down here, including 106. Okay, so a lot of real estate to work with there if we do get the confirmed breakdown. Obviously, though, the market will have the final say. So we'll see what we get here following today's FOMC. Now, looking at the pound here, guys, this is another reason why I think we could get a reversal here from the US dollar, simply because we have talked about these similarities between the current price action for GBPUSD and what we got back here in 2024 when the market topped out. So you can see that back here, we did get a rising wedge, okay, very similar to the price action that we're seeing now, right? Rising wedge into a top and breakdown. So same thing here, right? Over the past few months, we have gotten a similar rising wedge, and now we've had the breakdown. Okay, we had the breakdown on Tuesday. So this is what I've talked about in recent videos. And furthermore, you can see from the RSI back here, right? Bearish divergence here, and we had bearish divergence here. Okay, so you had the pound carving these higher highs back here, higher highs, and RSI making lower highs. All right, so very clear to see. Again, very similar to what we had back here in 2024. All right, so, going forward, guys, what I'm looking for here from the pound. Tuesday's session closed right at our key level. Now, it could have closed below, but in cases like this, what I want to see is confirmation from today's candle. If we see the market close down here in this area and confirm this, then in my opinion, this is a confirmed breakout and we're headed lower. Okay. Now, if today closes above and we get the rally back here in the range, then GBPUSD remains range bound between 134.30 and 136.30. Okay. So I want to be clear about that. Just like the euro, just like the DXY that we talked about, this is a potential breakdown, but you've got to be careful here because right now the market is technically holding this key support area. Okay. So, yes, we have the breakdown from this rising wedge, but it's yet to be seen if today's candle closes below 134.30. If it does, I think we head lower. If it doesn't, then we're range bound here and we could see a push back up here into this pocket, okay, before we get that reversal. All right, so just keep that in mind here with the pound. But we do have some early warning signs, like I said, that this could be playing out in a similar fashion to what we saw back here during the 2024 top. All right, now what would confirm that, obviously, going back here to the DXY, is if you get the DXY closing above that 99 area. Same thing for the EURUSD, right? You want to use the DXY as kind of a proxy here when you're trading the euro and the pound for that USD strength. All right, so wrapping up with the dollar yen, guys, no change here for this pair. And between, the euro, the pound, and the dollar yen, I really don't have much interest in this pair right now. Yes, it is range bound. We have a nice range that's developed here. If you've been trading this and you've been, shorting up here, longing down here, then you've probably done pretty well. But that's just not for me. I'm looking for something more significant. And for that, what we've talked about in recent videos is the yen basket. Okay, so if you look here on the weekly time frame, you've got this trend line here on the yen basket. And by the way, if you're not familiar with this, it's essentially like the DXY is for the US dollar. The yen basket is essentially a barometer for yen weakness or strength. So looking at this trend line, you can see from 2020, we've got a very clear trend line here. And looking at the recent price action here on the weekly, you can see where this served as resistance once again back here. We had the breakout, and now the market is testing this level as support. However, a couple of things here. The fact that the market can't get off of this level, right? Notice how it's just skimming along here, carving these lower highs. And also the fact that we had a recent breakdown from this trend line off of this low. Okay, so we had this trend line down here, held that support through here. Over the past few weeks, we have had a breakdown. So in my opinion, this is potentially getting close to breaking down. And if it does, then we could see the the yen weaken significantly to the point where we get a retest down here of the lows and potentially even lower. So if we get this, if the yen weakens, then we're looking at the dollar yen potentially breaking out. And that's especially true if we do get the DXY breaking that trend line we talked about. So you can see how all of this is starting to come together to where you could have a very high probability setup if we get these things coming together. But here's what needs to happen, guys. First of all, this right here, the yen basket needs to close below this trend line on the weekly chart. So we have to get a weekly close below here, right, to confirm this as a failed breakout and get that move lower for the yen. And also we need to see the DXY get above 99, okay, get above this trend line, and also the dollar yen get above this area around 145.40. So you can see how, once again, the market is finding resistance here today. So, in my opinion, this is not a buy just yet. If we see it get above here, we see the yen basket get below this 2020 trend line, okay, to confirm that buy side fake out. And we also get the DXY breaking out above 99. That right there, guys, could set up a nice long opportunity here on the dollar yen. But we're not there yet. We've got FOMC coming up today. And again, I am short the euro, guys. I want to be clear about that. But this is a starter position. I'm looking to add to this if we do get follow through below this area. And again, if we close above 115.30, then I'm out of the position. I'm perfectly fine with that because, again, the risk reward here is very much worth it. So I've accepted the risk. I know FOMC is coming up. We could see some significant movement here from these markets. But again, I'm very comfortable with the risk I've taken on. All right, guys, that's it for today's video. I hope it helped. If it did, be sure to subscribe to the channel, smash the like button, and also sign up with Blueberry Markets to get your 30% deposit bonus. See the link in the description of this video. Be careful with today's FOMC, and I will talk to you again tomorrow.